Welcome to Resource Management Training for the Michigan Department of Education School Nutrition Program. I am Bill Baldry, the Financial Analyst for the School Nutrition Program. Today we will look at the Resource Management Review versus the Administrative Review, including important timelines and what to expect in the off-site and on-site portions. We'll discuss what the Resource Management Review covers, including all the topics and the most frequent findings. You may be aware of the Healthy, Hungry, Free Kids Act of 2010, which called for a more effective and efficient review process. This consolidated the administrative review process, incorporated school breakfast, new meal patterns, dietary specifications, and performance-based reimbursement. It changed your reviews from a 5-year cycle to a 3-year cycle and provided for off-site monitoring. It also helps provide effective training and ongoing technical assistance. In Michigan, the Resource Management Review has been separated from the Administrative Review of your school food authority. These are 2 separate reviews and 2 separate trainings are provided. Because you are now on a 3-year review cycle, there are more administrative reviews than ever before. Those reviews are taking much longer than they previously had. We also have 7.5 program analysts, but only 1 financial analyst. The Resource Management Review is also dealing more with your business officials than the food service directors. So your Resource Management Review may be conducted at a different time than your administrative review. Here are the processes for each review. On the left is an overview of your administrative review process. You will first receive an email from your program analyst to set up a phone call and provide tools and checklists. You'll complete and return those tools and checklists as soon as possible. Those analysts have a 2-week rule. That is, that they need to receive your information back at least 2 weeks prior to the on-site review. Those analysts will then come out to your location and perform a review on-site, and they will ask you to submit any requested information as soon as possible. On the right, the Resource Management Review process. This starts with a list of off-site questions. We will ask you to complete and return those as soon as possible. The Resource Management Review has a 4-week rule. That is, that we need to get these questions back from you at least 4 weeks prior to your administrative review date. We will use these questions to determine you as either high risk or low risk. Low risk will receive a desk audit, while high risk will receive a comprehensive on-site review. And then we will ask you to submit all requested information as soon as possible. The USDA has determined that monitoring resource management is important to account for all revenues and expenditures of the nonprofit school food service program, to help ensure effective and consistent management of program resources, and to correct previously inconsistent and sometimes inadequate review processes. The USDA goals for the resource management section include maximizing resources. To do this, they use an off-site assessment to determine high risk or low risk status. Goals also include utilizing financial management staff when possible, identifying weaknesses in your food service program through the off-site risk tool, and providing corrective action and technical assistance for those areas. USDA goals also include providing the state's flexibility that we may implement more detailed reviews or focus simply on the areas in which you received a risk indicator. The Resource Management Review includes a risk assessment, giving the Michigan Department of Education the information needed to identify high-risk school food authorities, help incorporate a targeted review. So we will look at only the areas in which you received a red flag if you're determined to be low risk. It also gives us the latitude to review all or just a portion of the financial elements. Resource management is considered a general area, so no fiscal action is required. However, MDE is encouraged to withhold program payments for any repeated or egregious violations that have not been corrected. Your resource management review begins with the off-site tool. This needs to be completed prior to any on-site visit. The goal is to combine compliance and monitoring with technical assistance. It provides you more time to provide information to MDE and provides MDE more time to review your documents, conduct the reviews consistently, and provide any technical assistance necessary. This also identifies whether a comprehensive on-site review or a non-comprehensive off-site review is needed. Resource management procedures. Before your visit, we will notify your business official and the food service director and initiate the off-site assessment tool by sending you the list of questions. Once you submit those questions, we will review that documentation to determine your SFA as high risk or low risk, and then obtain any additional information as necessary. Then we can schedule an on-site review if that is necessary. On-site reviews, we will start with a short entrance conference with your business official to discuss what information is needed and the course of the review. The financial analyst will then perform the on-site review. Once all the documentation has been considered, an exit conference will take place with your business official to inform them of any technical assistance or findings and corrective action. The state agency uses a risk assessment via risk indicators. There are 6 areas in which the SFA may receive a risk indicator. 0 to 2 risk indicators qualifies the SFA as low risk. 3 or more qualifies the SFA as high risk, which requires a comprehensive on-site review. These are the first 2 questions in determining high risk or low risk status. Question 700 asks if the SFA's enrollment is 40,000 students or more. Question 701 asks if the SFA had any financial findings related to child nutrition programs on previous administrative reviews, A133, OIG, or other state audits within the past 3 years. Answering yes to either of those questions will indicate a risk flag. The 4 areas in which resource management covers are the maintenance of the nonprofit school food service account, paid lunch equity, revenue from non-program foods, and indirect costs. These are the areas that need to be tested for high-risk comprehensive reviews. For low-risk non-comprehensive reviews, only the areas receiving a risk flag need to be tested. The first area is the maintenance of the nonprofit school food service account. It is made up of 3 components: the nonprofit school food service account itself, net cash resources, and allowable costs. By applying the risk indicator tool, we can identify which of these areas are a risk area for the SFA. SFAs are required to maintain a nonprofit school food service account to maximize program benefits to the enrolled students and to ensure that that federal funds are used only for the operation and improvement of the school food service. These are the first 2 questions in this section. Question 702 asks, did the SFA have a separate financial account for the nonprofit school food service account? Please understand this does not mean that there needs to be a separate bank account, but only that you are tracking revenues and expenses separately for food service. Question 703 asks, did the SFA conduct a year-end review of total revenues and expenses to determine the school food service's nonprofit status? All SFAs are required to submit to MDE a report at the end of the year showing revenues and expenses for the food service program. So all SFAs in the state of Michigan should be able to answer this yes. Question 704. Did the SFA have year-end expenses in excess of revenues requiring a general fund transfer to cover the balance? If there was a loss in the food service program, then you should answer this question as yes. Still answer yes, even if you did not transfer funds from the general fund. If the SFA had a food service fund balance that at the beginning of the year that was able to absorb the loss, there was still a loss, and this question should still be answered yes. Question 705. Did the SFA transfer funds out of the nonprofit school food service account to support other school operations during the school year? This does not include indirect costs. So if the only reason that funds were transferred out of the food service fund was for indirect costs of the food service program, then answer this question no. Question 706. Did the SFA complete a process to ensure its compliance with the net cash resources limitation to a level at or below 3 months average expenses? This process could include a current state agency approved plan to address resources that exceed the net cash resource limitation. Your year-end report that you submit to MDE does this for you. But SFAs should be watching throughout the year to make sure that your fund balance does not exceed 3 months average expenses. So SFAs in the state of Michigan should answer this as yes. It's important to understand that nonprofit status does not require that the SFA operate at a break-even or at a loss. It only refers to the requirement that your fund balance stay under 3 months of average expenses. MDE must ensure that the SFAs observe this regulatory limitation on the use of nonprofit school food service revenue. We also identify your revenue excess or shortfall. The intent of this monitoring is to ensure appropriate use of funds to improve program operations and meal quality. Also to prevent neglect and underfunding of key program functions and maximize the use and investment of federal funds in program operations. When MDE monitors this area, we will first calculate the SFA's net cash resources, that is, revenues minus expenses. We will ensure compliance with your net cash resources in excess of the 3 months average expenditures and provide any technical assistance necessary to SFAs on how to spend down net cash resources that are in excess of the 3-month rule. If the SFA does have excess funds, some ways that those funds can be spent down include equipment purchases. That's the most common method. However, MDE has put out a policy memo addressing this topic, so be sure to follow the guidance given there. There's a list of pieces of equipment that can be purchased without prior approval from the Michigan Department of Education School Nutrition Program, but that list is also subject to a $25,000 cap per building per year. The SFA will have to submit a spend down plan to MDE, and MDE will ensure that all items on the spend down plan are allowable before approving the plan. MDE can provide technical assistance and corrective action to help SFAs identify opportunities to spend down these excess cash resources. Allowable costs. The intent of monitoring cost allowability is to restrict the use of program funds to expenses that are reasonable, necessary, and otherwise allowable. Expenses must be legal under state and local law. They must conform with federal law, regulations, and program terms. They must be consistently treated as direct or indirect. They must be net of applicable credits. They must be determined in accordance with GAAP, or generally accepted accounting principles. And they must be adequately documented. Here are some examples. Typical allowable costs include salaries and wages of food service personnel, travel, training and staff development, meetings and conferences, printing and publications, and food service or business supplies. Those are all items relating to your food service program. Capital expenditures, such as equipment purchases, can be allowable with prior state agency approval, if applicable. Some unallowable costs include alcoholic beverages, entertainment, costs of general government lobbying, contribution to contingency funds, and bad debts. MDE will test your actual expenses for compliance with allowable cost requirements. We will identify and correct any unallowable costs and ensure that these costs are adequately documented and treated consistently. MDE must review your most recent full year statement of revenues and expenses. We verify that your statement of expenses includes all costs charged to the food service account, and that these are for actual expenses, not budgeted or projected amounts. For a high-risk comprehensive review, MDE then selects a sample of at least 10% of the expenses to test compliance and allowability. For example, if the SFA's total expenses for the food service program equal $100,000, then MDE must test at least $10,000 of these expenses. A minimum of 10% is required in the areas of food, labor, and other expenses. MDE will look at source documentation for the selected expenses to determine allowability, to ensure that costs are reasonable and necessary for those specific program functions. We will review actual invoices and receipts and identify any unallowable costs. SFAs must meet documentation and record-keeping requirements. Records must be retained for 3 years plus the current year. MDE will verify the accuracy of your documents, ensure that your records are adequate to support expense transactions, and ensure expense records are supported with source documents, such as invoices or paid bills. Most common findings in resource management include unallowable expenses being charged to the program, commodity values not being shown as both a revenue and an expense, revenues and expenses of internal statements of activity not being consistent with the amounts reported to the state on the FID or school meals report, net cash resources exceeding 3 months average expenses, food service account expenses not being separate from other programs, having large outstanding bad debt balances carried over from each year to the next, not conducting a year-end review at all, and not tracking adult meals or returning payments to the account. This concludes the first module of resource management training.